When it comes to fintech, India has two clear powerhouses, Bangalore and Mumbai. One is the tech capital, the other, the financial capital. But who's really winning the money game? According to Tracxn's latest report, India's fintech startups raised $1.6 billion in the first 9 months of 2025, making it the third largest fintech ecosystem in the world, right after the US and the UK. But here's what's interesting. Over half that money came from just one city. And yes, I don't think you would be surprised either. Don't worry, I'm going to tell you all about it on this episode of Point Break. Bangalore has once again emerged as India's fintech powerhouse, attracting 52% of the total funding this year. Mumbai, meanwhile, followed with 22%, reaffirming their long-standing grip over India's fintech landscape. We got in touch with Neha Singh, co-founder and CEO of Tracxn, the market intelligence platform behind the recent fintech funding 9M 2025 report, to understand the nuances of this report.
Interesting figure of which people always discuss is the regional concentration. You still see Bangalore as a rising hub for maybe you can say all startups, but fintech startups, especially with 52%, followed by I think Pune and Mumbai. Is this a good thing? Is it an indicator that this city would still be attracting more? But at the same time, you would still have cities which will not be emerging at all. I mean, what is your take on this whole thing?
Yeah, so in fintech, actually, the top city typically toggles between Bangalore and Mumbai. Mumbai, because it is the hub of financial services in general. And so, anyone who has to work with banks, anyone who has to work with regulators, etc., Mumbai is a good hub for that. Right. And even if there are fintech companies who have offices, even otherwise in other cities, they have to, constantly keep going back to Mumbai for, a lot of the other activities. So it's Mumbai is obviously definitely one large hub. Bangalore is a big hub because it's just a good hub for tech companies in general and just the talent pool of engineers, right? And so even if you look at the overall funding, Bangalore is probably the second. Bangalore was at the top in terms of the total funding, and which city got the most funding in the 9 months. The second position was actually I think Delhi. This within fintech, obviously, like Mumbai has a
Pune
higher
also,
share.
Right? Pune also, right?
Maybe it's in the first 5. Yeah.
Okay.
Right.
First 5. All right.
So this is there, and Pune again. Maybe it's a spillover of being close to just having a good talent pool of financial services thanks to Mumbai. But so typically in fintech, we've seen the top city toggle between at least Bangalore and Mumbai.
So that's still okay, right? I mean, if you look at the larger picture, should people be worried by any chance that your concentration is still in these major cities?
So I think in terms of the large companies, I think anytime wherein you have companies that are more innovative, they require also to hire people who have sort of good engineering. They require sort of locations which have good engineering pools, and typically the top cities happen to be those. But there are a lot of other companies, like if you would have compared this to like a D2C brands, right? So that is a different story, because there the product market fit is very different, and there your distribution is also a key strength. Right, so there you would actually see a much higher ranking of like the tier 2 cities, I would say, right, versus like your pure very heavy tech companies.
But what does this dominance mean in practical terms? Bangalore is producing engineering-led startups that are scaling quickly. Think payments infrastructure, wealth tech platforms, and lending automation. Mumbai, meanwhile, is still the capital hub, home to banks, VCs, and late-stage investors. Bangalore startups are winning attention for product innovation and engineering depth, while Mumbai is leveraging financial expertise and investor networks to scale companies faster. It's a kind of complementary ecosystem. One builds, the other funds. Even as total funding dipped 17% from last year, the stage-wise trends tell a more nuanced story. Seed stage funding dropped 38%, signaling caution among investors at the earliest stages. Early stage funding actually rose 8%, reaching $598 million, showing continued confidence in startups with some traction. And late stage funding fell 23%, reflecting the moderation of mega rounds.
When you're looking at seed stage, there are probably lesser number of companies which are raising the initial one, but once there is a good pool of companies, investors are eager to do early stage, right? So some of the late stage investors are also probably writing smaller checks, right? Because for the later stage, there is also only so many assets that they can actually invest behind, right? So you also see, so if you actually combine your, if you look at just seed, there's a decline. But if you combine seed, Series A, Series B, which is, your early stage bucket, there was actually an uptick, right? Which is contrary to how it was in the late stage. So late stage, there was a decline.
Two major $100 million plus funding rounds stand out. Grow raised $202 million in a Series F round, and Beaver Services raised $170 million in an unattributed round. Both rounds illustrate how serious investors are about scaling platforms that solve real market problems.
The other thing which is also happening in the late stage is that, AI continues to be one very large investment theme for a lot of funds, right? And US happens to be one of the largest, countries which attracts AI funding. Because of the infrastructure, because there's a lot of funding which is happening in the infrastructure layer, right? And obviously lesser in the application layer, wherein you also have companies in India and across, but a lot of funding is going in the infrastructure layer. So I think this is just an overhang of the overall late stage investors, and how like sort of they are. Budgeting between the different countries and the top sectors.
Now let's look at exits and unicorns, because funding is only part of the story in 9M 2025. 23 acquisitions occurred, including Resultic's $2 billion acquisition by DigiNext, the largest of the period. 2 new fintech unicorns were created, matching 2024. One IPO, Shesha Sai, went public. These numbers tell us that India's fintech sector isn't just growing, it's maturing, building the kind of infrastructure and market depth that can support sustained innovation and exits.
Maybe the story with the funding and the number of rounds is slightly different, but your payments continues to be one large segment. Like even if you look at the large, like like your UPI based payments, that is one big segment which is there. The second one is your wealth management, right? Which includes companies like a Grow would probably fall into that because of the fact that if you just look at the number of traders, retail traders also in India, that's like a fairly large number, and right. And that is why you also had recently some of the things around the F&O trading, because the F&O trading volume in India is probably the peak. Right. So this whole wealth management, this whole investment, and I would say wealth management is probably the second, big bucket which is there. The third is your lending and the ecosystem which helps support the lenders, right? Right. So there are different types of lending which people are looking at, right? People, using better data, etc. People are looking at different sort of, obviously this is a very large market, in the traditional space, wherein you have the banks who are doing that. So for instance, you had, another company raise a large round, which is just in the housing lending business, right? So lending, that's a, third largest sector which is there. And thanks to that, you also have some companies which help you with setting up the infrastructure much faster. Right, so companies like a Finbox, etc., which just helps you enable that lending infrastructure in a much faster way. Right, so it was probably the similar set of sectors that have been there. Probably a little bit up and down.
So if you're an entrepreneur choosing between Bangalore and Mumbai, Bangalore gives you the tech talent and product-first mindset. Mumbai gives you capital, mentorship, and access to financial networks. And if you play your cards right, you could leverage both cities. Built in Bangalore, raised in Mumbai, scale nationwide. While funding cycles may moderate, India's fintech ecosystems keep evolving. Early stage momentum shows investors are backing promising ideas. Bangalore-Mumbai complementarity drives tech and capital synergy. And exits and unicorn creation confirm long-term confidence. From digital payments to wealth tech, lending to insurance, India's fintech future is being built today. In Tracxn's 9M 2025 report, startups raised $1.6 billion, created 2 unicorns, and completed 23 acquisitions, signaling robust activity across stages. Early stage funding is actually on the rise, showing investors' confidence in new ventures. As Neha Singh notes, the consistent activity at the early stage and the emergence of new unicorns highlight sustained investor confidence in the sector's long-term potential. With talent, technology, and capital finally converging, India isn't just catching up. It's positioning itself as a global fintech powerhouse, ready to compete on innovation, scale, and impact. Well, that's all we have on this episode of Point Break. I'll be back with more such insights. Until then, stay sharp, stay curious, and think AI, think AIN.